Hello everyone and welcome back to the market report on Cointelegraph. The market report brings you the information that you can't find anywhere else on the web. Today we'll be discussing what's been making the headlines in the crypto space as well as the wider business and financial markets. Most importantly though, we're here for you guys, our loyal viewers, to try to help you navigate through these trying times. We're looking forward to interacting with you, hanging out, answering questions, and of course, getting some crypto knowledge from my two co-hosts. Don't forget as well that if you'd like 20% off Markets Pro, then there's a link in the description just down below. And please feel free to send us questions, comments, whatever you're thinking about the markets currently, because we will be doing a giveaway at the end of the show. So stay tuned. Like, subscribe, check out our new channel. It's brand spanking new and it's the kickoff 2023. And yeah, let's get started with the show. Let me introduce my co-hosts today. Marcel and Sam. Marcel, of course, has over 17 years of crypto experience trading derivatives, following the markets and providing analysis. And he's also a keen boxer, and he also has his own channel, his own video now on the channel. Sam Borgi is our business editor at Cointelegraph, where he also brings a decade of experience covering traditional markets and, of course, the crypto markets. Marcel, Sam, let's go to Marcel first. How are you both doing? How are you feeling this week? The mute button is on.
Of course, I'm not as fresh as you are. Looking, I think you're based in Portugal, right? Here in Brazil, it's like 40 degrees outside. It's burning hot, so you can't even get outside. So you got to stay in the AC all day. But other than that, I do believe that things are getting calmer in the cryptocurrency industry. Of course, if you're a newbie, if you came to the industry over the past 2 years, you might be overwhelmed, I would say, about so many regulatory and so many FUD going on. If you have been here for 4 or 5 years plus, you know that governments and regulators are desperate to do anything to stop cryptocurrencies from growing. So you know it's all FUD, and you know it on the long term, it doesn't happen what they think or they not. So stay calm, stay positive. Everything is doing as planned. It's going as planned.
Fantastic. I'm glad to hear it. And yeah, keep cool on that AC. And you're still looking good. And maybe that green screen that I've heard many things about could be making an appearance soon. Sam, how about yourself? How are things in Canada?
Well, there's definitely no sign of AC anywhere. That's not until many months away. So still got the heater cranked up. But overall, yeah, the cryptocurrency market, the Bitcoin market is pretty status quo. It's been that way for a while. As far as I'm concerned, we are in a bear market. The shift has really focused on regulatory recently. And of course, that is creating a lot of nerves. If you're a Bitcoin holder, probably doesn't change anything in terms of the long term. But overall, right now, we still do see a strong correlation with stocks. Maybe not as strong as it was at some points during the bull or bear market, but we're still seeing that expectations around monetary policy in the Fed may have knocked Bitcoin back a little bit from the 24K level that we were seeing. But overall, I'm pretty status quo. I don't really fret the week-to-week fluctuations in the market because I've been through this many, many times before.
Thank you. And we're going to have to start calling you Uncle Sam, aren't we? Guiding us through this bear market. It's
maybe not Uncle
it's
Sam,
what we need. It's what the viewers need as well.
That has a very negative connotation,
That's true. The Bitcoin Uncle Sam, BTC Sam. Yeah. Okay, brilliant. I can see that we've got a few people watching at home, so hello and welcome. We're going to kick off with our first article this week. It's all about the fact that Bitcoin traders are eyeing 19,000 price target. Just going to share my screen. Minor technical issues here as I get the screen together. Here we go. It should be showing the screen now. And effectively what we're looking at here is a trading piece brought to you by one of the markets reporters. Voila, there's my screen. So Bitcoin traders are eyeing the 19,000 Bitcoin price bottom, and they're warning of a hot February CPI. If I were to show this article to my grandmother, she would have no idea what we're talking about here. There's a lot of acronyms, there's all sorts of things going on. So the key thing to point out firstly is that this $19,000 Bitcoin price is the breakdown target. The first question, Marcel, what is a price breakdown target?
Okay, so if there's a large continuation on the chart, an ascending pattern, or even a lateralization pattern, as we've seen over the past few days when the market is trading at range. So it doesn't matter if the market was moving up or if the market was moving sideways. The breakdown target means if the chart trades to the bottom, if it breaks below the support level, then that's the target we're gonna reach. It's like the worst case scenario if things doesn't go as planned.
Awesome. Okay. And then the next point on this article here is regarding the fact that the CPI is coming in, and it's coming in hot. CPI is the Consumer Price Index, which tracks a basket of goods in the US and effectively gives a figure which we can treat as an inflationary figure. If it's coming in hot, Sam, sorry, I need to scroll down there. If it's coming in hot, what does that mean?
So, as many of you are aware, the Federal Reserve is trying to tame inflation, the inflation that it created during the COVID crisis when it decided to print a whole bunch of money and lower interest rates again. That caused inflation, a massive rise in inflation. Now they're hiking interest rates aggressively to combat inflation. But recent evidence suggests, or at least some of the data suggests, that the February CPI print might be hotter than expected or higher than expected, which means that the Fed's actions may not be having the desired effect or not having the desired effect quickly enough. So today, Jerome Powell, who heads the Federal Reserve, basically testified and said that it's likely that the federal funds rate will be higher than we previously forecast this year. And we may actually go towards hiking rates more aggressively again, because they seem to have fallen back on the notion that we're going to be hiking by 25 basis points. Now Powell has left the door open again to higher rate hikes because inflation isn't coming down fast enough. So I think he's eyeing perhaps the employment figures, the wage figures, and we have the CPI print coming out next week. From what I can tell, based on early expectations, the annual year-over-year rise in CPI is expected to be lower in February than it was in January, but still pretty elevated. So it's not coming down fast enough, leading investors to speculate that the Fed could hike rates again, perhaps more aggressively than we thought a few weeks ago or a few months ago. And obviously, an environment of rising interest rates makes some investors that this isn't going to be a good thing for risk assets. And I think that's really where the paradigm is right now. And as Marcel will tell you, Bitcoin has traded in a tight correlation at various times with traditional stocks. So if stocks are reacting negatively to inflation targets or interest rates, that could have a knockoff effect on Bitcoin and perhaps explain why 19K is a short-term target there.
Interesting. Okay, thanks, Sam. Great analysis there. I mean, we have still dropped, what is it, over 6% over the past couple of weeks, and certainly since the last two shows on the market report on our new channel. Marcel, does this mean that there could be more pain to come for investors?
Well, Joe, first of all, I don't think that the 6% negative move that we saw on March 3rd has direct relationship with the CPI. I think it's much more related to the Silvergate bank, which we're going to discuss later. But as for the inflation concern, let's assume that investors are waiting for the CPI print on March 14 and consequently the Fed meeting to decide on the interest rates on March 22nd. But what are the investors' options right now? Let's be honest here. The stock market earnings are plummeting. Companies are firing thousands of employees each day. Housing market, the increased mortgage rates is killing this market. So if you want to buy a house, even if the price is 30% lower than what it was 2 or 3 years ago, yet your mortgage payment month for month is going to be higher than it was because of the interest rate increase. Fixed income, I doubt that any AAA security bonds or government treasury notes will outpace inflation. So you're putting money in a safe investment, but you're losing 2 to 5% year over year, every year for the past 2 years. And I do think that even the Fed chair knows that investors are running out of options, and that's exactly what he wants. He wants the market to reduce by itself, by the companies to let go employees, or investors to be afraid of the stock market and drain money from the economy. That's exactly what the Federal Reserve wants, because that's the quickest way to reduce inflation. So I do not think that there's a difference in 25 or 50 basis points. I think that the Federal Reserve is in a tight spot, and investors that are not taking risks or are not interpreting the importance of scarce assets such as Bitcoin will lose a lot of money.
Okay, yeah, we don't want that though, do we? Especially those watching at home. I mean, I'm just checking the chat now to see we've got not corgi, we've got a dog with us today. That's good to see, isn't it? The new channel is kicking off with aplomb as we now have a corgi as one of the fans. The preamble that you gave there, Marcel, does lead us into the Silvergate article, which seems to be the real hot topic of the past couple of weeks' news, and I think it's going to dominate headlines in March as a whole. Let's load up that article now, take a quick look about what the White House is saying about Silvergate. And now, for those that don't know, Silvergate is a bank, and it, to many people in the industry, it was described as the crypto bank, i.e., that was the bank that the crypto companies could use to get, access to the fiat payment system and have those dollar or other currency-denominated rails. The issue this week is that the Biden administration said that it is aware of the situation at Silvergate and will continue to monitor reports on the troubled bank as it unfolds, according to a White House spokesperson. So we had a press briefing where the bank was brought up, and in essence here, Silvergate, known as a crypto bank, was a key banking partner to a number of major crypto companies and projects. However, uncertainty over the bank's solvency began to spread at the start of March after Silvergate delayed the filing of its annual 10K report. We'll definitely touch on this by 2 weeks. A 10K report is a legally required document that provides a comprehensive overview of a company's business and financial condition. Okay, there's a lot to unpack with this one here today. Why is this significant? And well, let's actually take a step back from it all. Why do crypto companies need banks? Who wants to jump in with that first one? It might seem like a very dumb question, but I think we do need to establish this. Go for it, Marcel.
I can explain the basics of the operation for viewers. I'm not particularly familiar with how Silvergate operated, but they're more or less the same. So basically, every exchange needs a fiat in and out payment gateway. It doesn't necessarily has to be a bank. It can be a fintech, but there's got to be a way for the users to deposit and withdraw US dollars. I'm not talking about stable coins. I'm not talking about credits on the exchange that are listed as US dollars, because some exchanges do that, but behind the scenes, they're only trading stablecoins, and they rely on a payment processor to convert those stablecoins to real fiat money and send out to clients. That's why, for instance, we had Bybit, and I don't know if it was Huobi or OKX this week, that announced that going forward, they don't temporarily, even Binance, temporarily suspended the US dollars deposits and withdrawals. So when you cut their access to the financial system, immediately the only way to put deposit or withdraw money from exchange are cryptocurrencies, whether or not they are stablecoins. So the fiat payment processor, which doesn't need to be a bank, it's their way to convert those stablecoins to real US dollars to withdraw money to clients.
Sorry, okay, I was on mute there. Again, really great analysis, and important to highlight the importance of this story. Why is it important that people should be aware of the situation with Silvergate, Sam? Why should this be on their radar? And is it something that could affect people all around the world, not just in the US?
Well, obviously, Silvergate is considered to be a crucial banking partner for many crypto firms. And we saw, I believe, last week that it suspended its exchange network, even though it said that its deposits remained operational. I think right now Silvergate's been under significant stress since the FTX debacle, and the contagion effect that affected, Silvergate as well as many other companies. But I think right now we have to take a look at what's happening. I mean, the regulatory environment is tightening. We know that Moody's downgraded Silvergate's bank rating deposits from, I think it was a BA3 to a CAA1, which deems its obligations to be subject to a high degree of risk. Of course, we expect the company to post a significant loss. I think it actually reported a significant loss in quarterly earnings. So overall, I think that if faced a run on deposits from some of its largest partners, including Coinbase and Galaxy, that's going to have a negative impact, obviously, on the broader market. I just think there's a lot of confluence of factors right now that are affecting Silvergate. And right now, one of the very real options is going to be bankruptcy. So that could be the next domino to fall. And if that happens, then we're just saw another significant decline or another major blow to the industry, and that another fairly significant company is now in bankruptcy. It's not in bankruptcy yet. I don't want anyone to misunderstand me, but that seems to be a very real possibility.
Wow, bankruptcy on the horizon. Marcel, what do you make of that?
Yeah, I want to add 2 points here. First, back in January, I think 21st, Silvergate was forced to borrow $3.6 billion. It was an emergency loan from a consortium of banks. So it could provide the money, the liquidity for the withdrawals. It doesn't necessarily mean that the bank is under stress. This happens to banks because they operate in a leverage way. Like if there's $5 billion of deposits, it can create 50 billion worth of loans and trades and etc. So that's regular for banks. But there was a yellow flag back in January. And as the situation escalated, because of, as Sam said, the bank has had billion-dollar losses, things got more complicated. So in the eyes of the regulators and the government, they have the perfect plate to argue for a harsher regulation on cryptocurrencies, because they finally have a proof that cryptocurrencies volatility and lack of regulation on crypto firms, which caused the FTX collapse, had a relevant negative impact on the traditional financial system. So that's everything that the regulators were dreaming for, so they can have more power. So I think looking at a broader perspective, that's what worries me right now.
Okay, yeah, so it could lead to this sort of regulatory clamping down on crypto, which presumably would have quite disastrous impacts on the cryptocurrency sort of economy. Is there anything else that we should take away from this story, guys? Because it really does seem to be the news of the month. Anything that people at home should be taking steps towards, avoiding that sort of thing? Yeah, go ahead, Marcel.
There was some story about, it is real, it's not a fake story, that the Silvergate Bank had outstanding loans to MicroStrategy. So the information is correct. MicroStrategy, the tech company from Michael Saylor, which owns over 120,000 Bitcoins and trades using leverage, has an outstanding loan with Silvergate. But there's a big point here. The Bitcoins that were given as guarantee, as margin, as collateral, are not deposited on Silvergate. So even if the bank goes down, it's only going to be bad for the bank themselves, because MicroStrategy owns money to Silvergate, not the other way around. So there's no risk here of liquidation of the 120,000 Bitcoins from MicroStrategy due to the Silvergate issue. Just a heads up for our viewers, do not believe on the FUD or everything that's written on Twitter.
It's quite a good rule for life, don't believe everything that you read on the internet, and certainly not Twitter. Okay, guys, I don't want to talk this story to death, but Sam, is there anything you want to add just to frame and just to put a bow in this Silvergate sort of, well, I guess we can call it a scandal, can't we? It does feel quite scandalous more and more.
Yeah, I think Marcel put a bow on it nicely. Right now, I think for me, I'm eyeing whether we hear more rumblings about bankruptcy or receivership. So I want to withhold my judgment until we get more details there.
Awesome. Sorry, my mute button was slow to undo there. Okay, let's move on to the final story, in which case something that I'm personally quite passionate about and love to sort of shine a spotlight on. Andrew Singer here, who's, in my opinion, one of the best writers at Cointelegraph, does a lot of long-form content. He's asking the question here, is the IMF shutting the door prematurely on Bitcoin as legal tender? I don't care what the IMF does. Having worked in and around the organization for a few years, they do not care. This is, again, my personal opinion, not Cointelegraph's. The tagline here is, should the IMF leave the door open for developing countries struggling with inflation or even greater problems, like monetary sovereignty? Bitcoin was made for the global south. This is a quote that we've heard more and more. Bitcoin is for poorer countries, it's for developing countries, it's for enemies. Bitcoin is for, it's for everyone, it's for anyone. The quote there is taken from Ray Youssef, who's the CEO of Paxful. He's an Egyptian dude who emigrated to the US. I think he must now hold both nationalities, but he's very passionate about Bitcoin adoption in Africa. The crux of this sort of longer form analysis piece is that, the title pretty much sums it up. But why is it the IMF is clamping down and trying to tone down the impact of Bitcoin on places like El Salvador and the Central African Republic? So I guess we can dig into that today with Marcel and Sam. I mean, Marcel, you're based in a country which in the eyes of the IMF is a developing or a, what do we call it, like a less economically advanced country. They've got some sort of funny acronym for it. Correct me on this. Do you think Bitcoin's making a difference in your country? Let's start at home first.
Well, first of all, somehow Brazil is no longer a debtor to the IMF, which is the International Monetary Fund. So it's the financial arm of the United Nations. It's quite the opposite. For the past 10 years or so, Brazil has deposited money, has lent money to the IMF to be used on other third world countries or developing countries. So we kind of don't have immediate deficit of money, believe it or not, because over the past 10 years or so, we managed to create some reserves of $250 billion, which may sound a lot, but we haven't, we call it internal debt. So it's debt issued in Brazilian currency. So against governments, against foreigners that have accounts here, or against retail investors, worth like $1 trillion. So we don't have external debt, we only have internal debt. So we are creditors to the IMF. But as for the population understanding the benefits of Bitcoin being a part of the reserves, even if it's like El Salvador did, like 1%, 2% of the reserves that currently are 100% on US treasuries, that would be really hard for the Brazilian to grasp, because they do see value in the US dollars, because against the dollar, our local currency has been depreciating for the past 100 years. So if anybody has been saving in gold or in US dollars, he did a pretty good job over the past 20 or 40 years. So it's really hard for Brazilians to see any value on Bitcoin. But having said that, I don't think that the IMF has any say on what Brazil does or don't.
That's a nice position to be in. In terms of sort of, globally speaking, there's a lot of pro-Bitcoin propaganda that says that, Bitcoin is for poorer countries around the world. Bitcoin sets you free. Bitcoin has its own monetary policy that no one can interfere with. Firstly, do we agree with my very opinionated view there that does tend to be this sort of narrative that's emerging from the the Bitcoin camp? And secondly, is it true? Does Bitcoin help countries, particularly countries that would have otherwise been helped by the IMF? Sam, you look like you're staring into thoughtful space there, creating a fantastic answer for viewers. Is that fair?
Yeah, I think that obviously Bitcoin has been imagined as being an alternative monetary system, and I think it has the properties of that. I think right now we're facing the question of adoption and how far can adoption go, and what will Bitcoin's future be? Will it be a monetary layer for central banks in emerging markets, for example, or will it actually be a peer-to-peer currency? It being used as a peer-to-peer currency seems to be less impactful because we haven't really seen that level of adoption yet. So, in terms of how big or how narrow Bitcoin's future is still subject to debate. Right now, I do see it as a digital gold, as a new monetary asset. How that translates into use cases on the ground is still up in the air. Regarding the IMF, I mean, I don't think any of us should be really surprised about what they're saying. I mean, they already basically have warned or even sternly talked down El Salvador for its Bitcoin gambit. IMF is there to really control or to be part of the traditional monetary system. I don't think that something like Bitcoin or digital assets is something that it really wants to entertain. And I know that there has been, perhaps their overall framework and how they operate is quite limited. So they're going to be obviously very critical about digital currencies that could disrupt the traditional financial system. So I don't particularly care what the IMF says about Bitcoin, but a lot of countries do. And if they use it as a threat, maybe they say that, well, if you recognize Bitcoin as legal tender, this could affect your future, our future business dealings with you. If you want to get loans in the future, well, you're gonna have to play by our rules. And you putting Bitcoin on your balance sheet or accepting Bitcoin as legal tender, that could affect your credit risk and your credit outlook, and that could affect how we deal with you. So that seems to already be the case around El Salvador. World Bank, IMF have warned El Salvador. So it remains to be seen how much of the global south is gonna adopt Bitcoin as legal tender. We'll see.
I like the way you segued in there. Yeah, the IMF's views on these things and just how relevant they are nowadays as well. But the key thing is that yes, a lot of developing countries do need debt or loans at least to grow, and the IMF used to be the biggest sort of creditor. Nowadays it's actually China. But what happens if you want to build that new port, that new bridge, that new university, or that new school? And whereas the IMF used to help, you say that you've now got this interest in Bitcoin, would they say no because of it? I think this is sort of the scaremongering that is to some extent taking place in emerging markets. Go ahead, Marcel.
Joe, I think we're using the wrong word here. The IMF doesn't help anyone. It's a bank. It loans money at an interest rate. And for developing countries to have a debt in US dollar, as I said, is agonizing because you see your local currency devaluate week after week or year after year, and still you have to pay the US dollar debt plus interest, no matter if your local currency is going well or not. So it used to be the savior of the emerging countries, but people started to realize that it was a trap.
Completely agree. And when you look at the actions taken by the first country to adopt Bitcoin as legal tender, El Salvador, and the way in which, I don't know if you saw, there's one of those stories last year that we covered. There was, I think it was like 30 central bankers from around the world, some of them delegates from regional banks, and visited El Salvador. They went to Bitcoin Beach, they tried out Bitcoin Lightning and that sort of thing. And it was just quite interesting. It was obviously massively PR friendly from Bukele, but it did make you think, maybe this is a tool that could be used in developing countries more and more. Also, how much sort of teeth does the IMF really have? Is it genuinely going to turn around to these developing countries and say, no, we're not loaning you any money anymore? Because the IMF does, as Marcel points out, survive off of these loans. Do we think that it's all hot air, Sam? Do you think there could be some actual, some drive behind what they're saying, shutting the door permanently on developing countries that turn to Bitcoin?
I suppose it depends on how strongly they pivot to Bitcoin, these developing countries. If you take a very strong approach like El Salvador, to the point where you're trolling the IMF and these institutions, perhaps, I just think it's still early days. It's difficult to gauge just how far they're going to go with it. I mean, their warnings about digital adoption, digital asset adoption, I think is par for the course. Obviously, they're not going to encourage countries to take on assets that they consider to be risky and very open-ended in terms of how that could impact traditional finance. But it remains to be seen how far this Bitcoin experiment goes. Maybe if Bitcoin adoption continues to grow, the IMF will have no choice but to recognize it as a potential digital currency as well, and recognize that sovereign nations have recognized its value. But right now, Bitcoin is still kind of on the outside. It's forcing the IMF to really have an opinion about it, but it's hard to gauge just how far this is going to go and whether their warnings will carry actual consequences.
Great point. Go ahead, Marcel.
I just want to highlight that El Salvador exposure in Bitcoin is less than 5% of their foreign reserves, which is based on euros, US dollars, gold, but less than 5% it's sitting on Bitcoin.
Which is not a lot. That is exposure for ants, isn't it, Mary Bukele? You talk the talk, but you're not walking the walk. I'm kidding. But yeah, and if you're looking for some interesting sort of on-the-ground analysis of Bitcoin adoption in El Salvador, then check out my video. It's on the original YouTube channel on Cointelegraph. It's been there for 2 weeks now. That's the other thing, is that regardless of what the IMF says, it doesn't matter. Bitcoin is a free open source software. It's a protocol that anyone can interact with. All you need is a mobile phone and an internet connection, and away you go. And again, to run a node, all you need is an old laptop. So you can take part in this monetary revolution, this monetary network, whether or not the IMF or this big daddy figure says so. And that's also what's so freeing about it all. It's the ability to opt out of the current economic system, which in most developing countries is pretty discriminatory. And that's certainly what keeps me motivated in this space, and what makes me want to sort of advertise that Bitcoin works to people. Right, I think we've definitely talked enough about the IMF. Let's move on to the next segment. This week we're talking about Markets Pro. Would you believe it? So I'm going to introduce a segment. Hello, everyone. So we're going to be talking about liquidity today, which is LQTY on the token. And this week we're talking about newsquakes with regards to LQTY. As you know, I'm sure, news is what moves the crypto market, and the newsquake service by Cointelegraph Markets Pro helps traders like yourself stay on top of those important developments. Newsquakes are automated alerts that instantly notify users when market-moving events happen. Thanks to them, Markets Pro subscribers often beat the crowd to the most important news of the day. So never underestimate the power of a newsquake, as on February 28th, the last day of February, a newsquake shared Binance's announcement that it would list LQTY in the innovation zone on Binance. Just 5 hours later, the price rocketed from $1.42 to $2.58, so $2.50, a remarkable rise of 82%. If you buy $100 of that, you now have $182. These are the tools that can help you stay ahead of the markets. Following this, we have AGIX token. Here we're looking at the Vortex score, which is our sort of Cointelegraph social metrics analysis tool. A Vortex score takes the current market conditions and compares it to the past market conditions. High score is good, low score is bad. We're talking 0 to 100. So anything over sort of 60, 70, 80 is a good score and could be perceived as bullish. Anything with a lower score than 50, you might want to consider selling it. And this week, what popped up was AGIX. And this token's performance defied the week's dismal market. On February 26th, the asset was trading at 39 cents. and it saw a high vortex score of 87 light up on the dial. 5 days later, the price had reached a weekly peak of 55 cents, a solid increase of 41%. Not bad, eh? And as I say, these are the things and tools and tricks up your sleeve that you can tap into if you're part of the Cointelegraph Markets Pro subscribing team. Just want to say a quick hello to Radar BTC in the chat. Hope you're doing well wherever you are. And yeah, let's go back to the team. So I don't think there's a segment from you this week, Marcel, just to double check. Your segments are now on your own videos, which we should all check out.
My own video is out every Friday, 12 o'clock p.m. Eastern Time. So we'll discuss the macroeconomic events and impacts on the crypto space.
Fantastic. I'm glad to hear it. In which case, let's do closing thoughts and a little conclusion for this week. Sam, anything, maybe life advice? I feel like it's more life advice at the moment because the bear market is grinding on. We haven't had a pump for a while, and yeah, people are getting a bit tired of it. So what do you reckon, Sam?
Oh, there's definitely no life advice to be given from me. I mean, only thing I can say in the current financial environment is that, try to position yourself to have, multiple sources of income, try to invest responsibly. Don't rely on one thing, or don't put all your eggs in one basket. And that includes Bitcoin as well. I've never once thought that everything in one basket approach is a good idea, because you know what you know, but you don't know what you don't know. And you have to respect risk and the potential for risk. So, yeah, if you can survive the bear market, though, in Bitcoin and crypto, in my opinion, you're putting yourself up for success. These markets move in cycles, and right now we're at the bear end of the cycle. But there will be an improvement. Market sentiment will shift again, and we'll see whether Bitcoin continues to follow its previous cycles.
Fantastic. Yeah, diversification works very well for some people. For others, they just go all in on Bitcoin. Oops. What about yourself, Marcel? Any advice or tips?
I think Sam was saying don't put all your Bitcoins on a single wallet. Use multiple multi-sig solutions, but stay all in.
Oh, that's what you meant.
Joking. But that's what I would recommend. Yeah.
Oh, I see. I have Sats and Bitcoin, you see. Sats and Bitcoin, diversified.
I would recommend the viewers to try some sort of sport, meditation, or whatever makes them feel good. Because having the guts to believe in something and wait 6 to 8 years for the conclusion, things are not made overnight. Amazon didn't become the biggest e-commerce overnight. It took like 15 to 20 years. So those massive changes sometimes occurs in a more rapid way. In a single 6-month period, it accelerates a lot. But when you're measuring decades, it's really hard to keep your position, to keep your conviction. So I do think that doing some kind of sports, meditation, whatever hobby or interests you, to take your mind outside of the investment markets, it's going to be really good for you.
Very good point. Get some fresh air, try something new, and yeah, be patient. As Marcel points out, it could be 6 to 8 years that we're in this mess, which is quite a long time, especially if you're a younger demographic. Okay, I'm going to agree with both those points. Diversify with wallet selection and with Bitcoin selection. Have some Bitcoin and have some bigger Bitcoin. Wait, that makes no sense. And as Marcel says, yes, get outside, try some new sports, pick up meditation, whatever it may be that helps you get through this sort of long drawn out period. And of course, check out Cointelegraph Markets Pro. Check out our content there. Check out Marcel's wonderful videos and the Bitcoin mugs. And we will see. I'll just check that there is I don't think there's a giveaway this week, but that's okay because maybe we'll roll it over to the following one. See you here, same time, same place next week, and we'll get into the markets together. Thank you so much for tuning in. Cheers, guys.